Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, November 28th. Hey, this week is pretty action-packed in terms of what we get for economic data. Today we got a couple items here, and we'll start off with the Case-Shiller Home Price Index. This index kind of gauges the 20 largest markets in the U.S. And as you can see, back in August, we had a 6% year-over-year increase. In September, got a little bit higher at 6.2%. So still good, very good appreciation levels that we're still seeing in the markets today. Of course, a lot of it is due to low inventories. We don't have a lot of home. We still got a lot of pent up demand out there, which is probably one reason why we're seeing new home sales doing so well. Primarily because again, people aren't putting their homes up for sale, and they're going more towards the newer homes here. Last but not least, we got the consumer confidence for the month of November. So the last reporting back in October, we had 126.2 on the index level, and the forecast is supposed to dip a little bit down to 124.8, and it came in even hotter at 129.5. And this is not surprising. I mean, the economy is doing well. We keep seeing the employment numbers getting better. We're seeing some great numbers in terms of Black Friday to Cyber Monday. Amazon's going up. A lot of these other companies went up. The only one that kind of disappointed was Macy's, and that was only primarily because apparently on Black Friday their credit card systems had problems, and upset customers went to Twitter and started complaining on Twitter about it. So they went downwards as a result of it. But other than that, we had, like Walmart and Amazon doing very well in those terms. And of course, we got to talk about the tax reforms. People are feeling pretty good. They, of course, would like to pay less in taxes. And of course, we're seeing consumer confidence should be rising in this terms. And these are actually the highest numbers we've seen in quite some time. I think in like approximately 17 years is what I saw, which is fantastic. Let's jump over to the headline news. The stock market, of course, is up. The Dow is up over 100. We started the market up a little bit yesterday, but a lot of it pulled back, and even the Dow barely was up yesterday after close. And a lot of that, since they've been keep going up and up and up, there really wasn't anything that would bring it down. And it was probably more or less a profit taking. But today we're seeing some good data coming out, and again, feeling pretty good. Jerome Powell, the new person, the new gentleman that's going to take over for Janet Yellen at the Fed Reserve as the chairman, has his confirmation hearing, and basically it sounds like with his confirmation hearing, what he's been saying on there, it doesn't sound like anything. We're really going to see any changes. It's going to pretty much he's going to stick to the plan that Janet Yellen set forth, and he's just going to start applying it. The rate. We could expect the rate hikes to continue. I think there's been some uneasiness in 2018 if we should continue it with the inflation level so low. Uh, inflation level so low. Yeah, of course, we don't want to get that inverted cross. We want to keep the economy moving. So they're thinking that over time, that they're hoping that with inflation will rise, with the wage increases help boost it up there. But we'll have to wait and see. There's a lot of things out there. Some new things that we are now experiencing now are more technology driven, and that's also helped keeping costs low. So maybe we don't see that in the future. I guess time will tell uh, when we see those. But again, uh, that's some of the solutions that we're seeing why we might see inflation low for some time. Let's kind of move forward here and see the bond market. We got mortgage-backed securities, and as you can see, we're starting to see this nice trend upwards here. We passed the 200-day moving average, which has been a hard one for us to do, and right now we're breaking above the 50-day moving average, which is a great sign here. As I did this, we're only up 8 basis points, but as I, put these together, I see it even rising further. It went up to about 11 basis points. So. Um, I think you're going to see a little bit of improvement today in pricing compared to what we saw yesterday. Yesterday we didn't have anything, but we went up, and then again, I think you'll see again more improvement in pricing today. And even though the stock market is up, it's more at the expense of the treasury. As you can see, we're down about 1 point here for the treasury, which brings it down to about 2.31. And we're starting to approach this 200-day moving average, and this is kind of what we want if we want to get better rates. See any real changes in rates. Once we can get above this 50-day moving average, which the good thing is over this past last couple of days from last week to now, we finally broke underneath the 50-day moving average. As you can see, we've kind of been above it. Now we're broke below it. So hopefully we can keep this momentum going. So as you can see, we get this little trend here that will bring us well over underneath this 200-day moving average. And again, we could hopefully get some improvement if we can break below it, this level here. So that pretty much wraps it up today. But if you guys want to get more data coming throughout the day, just come over to Twitter. You can find me on my handle, Mike Bjork, and get the data from there. I hope you guys have a great rest of your day. Thanks so much for watching. We'll look forward to see you guys tomorrow. Bye-bye.